Hi everybody and welcome to Imperial Wealth. In this video, we're going to be doing some beginner's technical analysis. We're going to be having a look at the Bitcoin chart. We'll learn how to read candlestick patterns, how to add in support and resistance zones, and also a little bit about triangle patterns and wedge patterns. If you want to learn how to do that, stick around and we'll show you right now. So first of all, if you are interested in learning some technical analysis, it's probably a good idea to get TradingView, which is probably the main charting tool that a lot of cryptocurrency traders use. There is a free and a paid version, and you can do everything I'm showing you today with the free version. First of all, we are going to open a new chart. So in TradingView, to do that, I just hit this plus right here. So to select the trading pair for this chart, it's by default, it's opened up a BTC USD, which is Bitcoin against the US dollar. You can click on the symbol search here and type something in. So let's type in BTC to find a Bitcoin chart. And you'll see on the right here, it lists all the exchanges. So this will be the Bitcoin USDT tether pair on the KuCoin exchange. If we want to narrow down a specific exchange, we can select all sources right here and type in the exchange that we want. In this case, I'm going to select FTX, and it's going to show me all the Bitcoin trading pairs on FTX. Let's go the Bitcoin Tether pair. So one of the really important things when you are charting is the time frame that you are charting. There's a high time frame, which is the weekly and the monthly. So if you go up here where we get right next to the trading pair, we can see that this is the daily chart. So you can, the high time frames are the monthly, weekly, and daily. And then the lower time frames are anywhere from 1 minute up to 4 hours. So first of all, let's talk a little bit about candlestick patterns, just quickly how to read them, and also a couple of patterns that we want to look out for that might give us an indication of which way the market is moving. So if you're completely new to candlesticks, they're quite easy to read. The body of the candlestick simply shows the open and the close. If it's a green candlestick, the close will be above the open. So we can see here at the bottom of the solid part, this is where it opened for that month. And then at the top, this is where it closed for that month. Now it'll be the inverse of that if it's a red candle. So in this month, it would have opened up here and then it would have closed here. So oftentimes these candlestick patterns are called the OHLC, which means open, high, low, and close. So we've covered the open and the close. What about the high and the low? Well, that's simply the wick of the candle. So this is showing that basically this one right here, it opened up here for the month. It traded all the way up to the top of that wick within that month, and it also traded all the way down to here, but it closed at this value right here. I'm going to switch to the weekly to see if we can find an example of a few different types of candlestick patterns that are commonly associated with changes in the market direction. So one of those is called a hammer pattern, and this is a fairly good example right here of a hammer. Now, what normally happens with a hammer is that it is can be a sign of a reversal. So we normally find hammer candles when we've had a extended trend to the downside or the upside. So at the bottom, we call it a hammer. At the top, we call it an inverted hammer. And you'll see here that there's been a downtrend for quite some time. And then we find this hammer at the bottom signaling a reversal in the market. And you'll notice it doesn't happen straight away, but not all that long after this, about 4 weeks, we got an extended uptrend. Here's a reasonably good example of an inverted hammer up here, where we've had an extended uptrend. And you'll see that the market has become indecisive right at the top here. And we've got this sort of shooting wick up the top, making it like it's not a perfect hammer, but it's sort of the inverse of the hammer that we looked at before. But you'll see that very quickly after we got this hammer pattern, the market did reverse and we were in an extended bear trend. That weekly candle there was actually signified the top of the last bull market for Bitcoin. Let's go down to the daily chart and we're going to see if we can find another pattern called a bullish engulfing or a bearish engulfing. Here's a really good example of a bullish engulfing. You'll see that we have to rely on the previous candle, and then the next candle, the open and the high are outside. It's like engulfing this candle. We can see after getting this bullish engulfing candle on the daily, we had an extended run to the upside. Here we have a good example of a bearish engulfing candle. So we see that the previous candle was green, and then the next one is a red candle. It's a bearish candle, and it has a much larger body that engulfs the body of the previous candle. We can also see here that this bearish engulfing candle was followed by some downside to the market. Then we had an upside move and then a more extended move to the downside. So those are some quick basics on how to read the candlesticks, and we covered the hammer patterns and the bullish and bearish engulfing. The next thing every beginner at technical analysis should know is how to draw in support and resistance lines. Now, to draw in some support and resistance lines, I'm actually going to find a chart that has a bit more history than FTX. I'm going to find an older exchange. Let's go all sources. And let's actually use the USDT on Binance. Then we've just got a lot more history to chart here, all the way back to 2018. So on the weekly chart, this is a great place to start to put some support and resistance. And we will call these the major support and resistance. So what I'm going to do is select the line tool over the left-hand side here. I'm going to right-click my mouse on that. And instead of trend line, I'm going to select horizontal line. So the basic theory behind support and resistance are we're finding key levels of price action where the market either reversed or the market had a hard time getting through there. And these are many factors go into this. These are key psychological levels, whole number levels, previous tops of bull markets, previous bottoms of bear markets. So let's put in a major resistance at the top of the 2018 bull market by clicking right here. We are basically right now sitting on that as support. So we'll see on the way up, that line was resistance. And then right now we're sitting on support. So I'm actually going to change the color of that line to green. So that's a support line. And you'll see that the price has really stalled at this level, which means it is a very strong point of support for the current price action. Now, if the price of Bitcoin breaks down further than this, where is the next major resistance? Well, we can see that we had some topping out here. You can add strength to a support or resistance line when the market has bounced against it at multiple times over multiple years. So for a major one, because we're on the weekly, we can see that right here, we've hit roughly this area, right here, and right here. So this is probably a great place to pop a major point of support. So we'll see that on a macro time frame, if we break down here in the price action from 19,000 and we go into more of an extended bear trend, we could assume that we'll have some similar sort of resistance at around this mark. Now, just because there's been support and resistance at these points in the past does not guarantee. We'll see at certain points that the price action just blows through a support or resistance line when there is a lot of momentum. Let's pop in a resistance line. So we're going to do this in red for the very top of the previous bull market. Now, some people do pop the support and resistance lines on the top of a candle's wick, and other people, different styles of technical analysis, tend to use the bodies of the candle. There is no completely right or wrong answer. It's just different styles of technical analysis. So I'm going to change this line to red because we are currently below this. So if we were to revisit that in another bull run, Let's hope that that comes soon. We will find on balance of probability, there will be some stalling of the price at this level. The last thing that we're going to look at are some triangle and wedge patterns. So the main two types of triangle patterns are an ascending triangle, which is a bullish signal, and a descending triangle, which is usually a bearish signal. So I think I can see what looks like a descending triangle here in the price action that we've recently had in June on Bitcoin. So I'm going to select, instead of the horizontal line, I'm going to select a trend line tool. So I can see here that right on this support and resistance line, the price was stalling. So let's make that a flat bottom of a triangle. And then we've got this descending sort of shape on the top. So I can draw that down here like this. It's not going to be a perfect triangle, but you get the idea. So you can see that the price action, the overall trend, so there's another saying called the trend is your friend. The overall trend has been bearish. So we've got the descending triangle, we've got the flat bottom, and then the price usually goes up and down within that triangle. At some point, the price action will break through the triangle, and usually it's an impulsive move to the downside or the upside. Let's see if we can find a bullish version of this. So here's one. This is the run up to the last bull market top. So we can see that the price action is well above where it is now. And let's draw in a couple of lines because we've got a very large impulsive move to the upside. And then we can see that the price is stalling at this resistance point that we've drawn in. Let's make this the top of the triangle. Actually, I'm going to draw it on the top of the bodies of these candles. And then we can see here that the price action on the bottom of these candles is sort of bouncing neatly along this ascending triangle. You can see here a number of times the price hammering up against the top. And then finally, when it breaks it with force, and we have a huge impulsive move to the upside. So these triangle-based patterns can be really good for continuation of a market where there's a clear trend, an upward trend or a downward trend. And sometimes you'll find that once it's broken out, it will retest the top of that triangle. Let's see whether that did that by going down to the hourly time frame. So I'm actually switched to the 4-hour chart just so I can get a little bit more resolution. And it looks like we have had a retest after that initial breakout. It's very common when there's a breakout of a triangle for it to retest. And this can be a great time to enter the trade. So you'll see right here, it's this 4-hourly candle clearly broke out of the ascending triangle. And then we had a red candle that brought all the way back down and retested the top. So if you have drawn in a triangle and you see a clear breakout from the price action, you can quite happily set a buy order for that around this area and hope that a retest occurs, and it can be a great way of trading with the trend. So finally, with the wedge-shaped patterns, instead of having a flat top or bottom, they've got more of a wedge shape to them. And normally when we've got a descending wedge like this one, sort of pointing downwards, this is more of a bullish wedge. Then when we have an ascending wedge, let's see if we can quickly find an ascending wedge on this Bitcoin chart. Here's just a very quick example of a kind of a large time frame ascending wedge. It's not a great example, but you can see here, instead of a flat top like that, you can see that the series of higher highs are also following sort of a wedged shape pattern. Now we can also, so usually an ascending wedge is a bearish sign, and we did have a breakout at the top of this wedge, but then you can see the price action very quickly fell through underneath. This is known as a fake out. So instead of a breakout, it's actually a fake out, because when it goes to retest, then the price breaks down. So there we have it. We've got ascending and descending triangles and ascending and descending wedges. That brings us to the end of this primer video on some technical analysis for beginners. I hope you enjoyed this content. If you did, please do subscribe to our channel. And if you haven't checked it out already, we do have a weekly podcast where you can learn all about technical analysis, macroeconomics, and crypto mining. Thanks for watching, and we'll see you in the next video.